Howdy, Jacob here. Today we're going to do a more in-depth analysis on Forward Air Corporation. I'm going to do a quick review of the financials again to remind everybody, and then I'm going to go over some of the notes that I took from their most recent quarterly reports and 10K. Their 10K, by the way, is from 2023 as they have delayed their 2024 one, which we will get into in the notes. But first, let's go over the financials and just remember, everything I say is my opinion. Do what you want with it. I'm just hoping you learn something about the business and you don't take away anything as an end all be all. Even if it says that it's a great price point at this point in time, uh, please still do your own analysis. Okay. So, anyways, financial standpoint, over double in revenue over the last 10 years, 80% increase in the last year was from an acquisition. Gross margin was going up until that acquisition, and now the gross margin is well below what it was 10 years ago. Operating margin negative, having trouble with synergies. We're paying a dividend, and it was increasing, and it was pretty inconsequential in relation to earnings per share. But then again, most recent year is negative. We see that majority of their costs are going to be cost of goods sold. So it's just the materials to be able to sell your products or services. They don't have any R&D. Their balance sheet shows, that was great until this acquisition. And then they went into debt to fund um, the acquisition of Omni, which we'll get into shortly. And we can see that the acquisition, 1.6 billion, um, funded it through debt. But again, before that, had some great, paying great share repurchases, great dividends, and it was well below their free cash flow. So the use of capital allocation was pretty consistent until this Omni acquisition. So let's get into it a little bit. Let's go over some of the things that I took from the most recent quarterly reports in 10K. So they made an acquisition in January of 2023 for 56.5 million to increase their LTL in the middle US. They paid for it with a mix of cash on hand and credit facility. So the LTL is kind of their business. It's their less than truckload business, and they're kind of one of the leaders in it. They're kind of one of the leaders in expedited LTL shipping. Obviously, you have your FedEx, your Old Dominion, UPS as kind of the dominance in logistics and transportation in general. But when it comes to expedited LTL, it's a bit smaller market. It's more immediate transportation of goods and products, and so for that, they are one of the leaders in it. They reported to combine with Omni Logistics in August of 2023, and below are some of the comments that were said about the acquisition. So they said it would strengthen Forward's status as a less than truckload provider for expedited freight customers, the Omni team customer base and commercial engine to accelerate Forward's long-term growth, deliver meaningful cash earnings per share with opportunity to achieve up to 125 million in run rate EBITDA synergies. So again, that's hopefully hitting bottom line and growing. 125 million annualized, pretty impressive if that were to be the case. Strong cash flow generation to provide rapid deleveraging and continue dividend payment, deleveraged to 2.0 times within 2 years of the deal closing. So they ended up with a final purchase price in January 2024 of 2.1 billion, consisting of 20 million in cash and 35% of Forward's equity closed. So you can see that their number of shares went up because they issued shares to the private holders of Omni. And with that said, they suspended their dividend in 24 Q1. So just funny that they say that they will create a strong cash flow generation to provide rapid deleveraging and continued dividend payment. And the very next quarter, they, or I guess this is August 23 and this is Q1 of 24. So within half a year, they suspended the dividend. And so we can already see that I'm already seeing some discrepancies between what the company is saying and what's actually happening. So how am I supposed to truly believe that the rest of these will come to fruition? We shall see. Expected CAGR of the less than truckload market is roughly 4 to 6% on the different websites and sources that I saw for the next 5 years. So just a little bit greater than inflation. If you have some purchasing power from acquisitions, that can grow you more. But this company went into debt to fund a massive acquisition. So the majority of their cash flow, if not almost all of it, will be going to debt reduction and delivering. According to Advanced Commercial Capital and Anders CPA, the logistics profit margins range from 2 to 8%. That's kind of a very solid logistics profit margin. And we see that Forward had net margins roughly in line with that. It was a bit higher before that acquisition, but again, logistics kind of popped off from COVID and had some great margins that are now being dampened to more stable levels. Strategies from their 10K are expand service offerings, manage pricing, best-in-class service, strategic acquisitions, and enhance information systems. They have a 4.5% compound annual growth rate since 2009 on their average weekly volume. I thought that was pretty impressive. So what they're shipping is going up about 4.5% a year over the last decade, longer than a decade. No customer accounts for greater than 10% of revenue, with the top 10 accounting for 26% of revenue. So they don't have a lot of concentration on one customer, which is great. They're well diversified. And so if they lose their top customer, they're not going to get destroyed in revenue and top and bottom line. Forward reported Q4 and full year 2024 results 226 and have still not reported their 10K. Another concern of mine, and the discrepancy between what the management's saying and what's coming to fruition, and then the delay of the 10K is giving me a bit of concern here, enough to where personally, again, this is just more informational, but I will not be buying this company because I don't like discrepancies, and you can't strike out if you don't go to bat. And so here, if I don't buy the company and it goes up 20-fold, I have no FOMO. But I just don't like these discrepancies, and I can't really trust business at this point. But to finish off my review, the use of free cash flow over the last 3 years from 2021 to 2023 was 16% to dividend, 45% to share purchases, and then a huge whack of debt issuance and acquisitions due to their acquisition costing over $1 billion and their market cap being less than that as we speak. Omni represented 48% of revenue. Total loss from continuing operations in the full year 2024 was over $1 billion, and Omni represented 1.04 billion of that loss. And so looks like Omni's hitting the top line pretty well, but bottom line is having some trouble. Their long-term debt, they have $1 billion due in 2030 and $725 million due in 2031. So that's a lot of debt, but luckily it's not due for a while. Even still, they produced negative free cash flow last year, and even if they get to their peak of 150 to 200 million, that's going to take quite a bit of time to pay off. So they're going to have to likely refinance that. And so for me, my new assumptions are here, but again, we're saying it needs to fall 36% before we get their return looking for here. Even if it falls to this price, I'm not going to buy it. So I do think that there's a purchase price for everything, and I absolutely agree with that. But for me, I would want to get well beyond a 15% return here. I think that there's so many unknowns. We're still very new into this Omni acquisition. We don't know how synergy's going. Or we do actually, and it's going poorly. And so for me, I just want to see a lot more positive momentum here before I get comfortable even thinking about investing in this business. But I do hope that you enjoyed some of the notes that I said, you learned a little bit. And if you understand this business and you're confident, I do think that from a price perspective, it's probably a good price. I mean, we saw that a good margin business or good margins in this business are 8% or so. So if they can get to that, it's probably a great price point right here. But for me, based on what management's doing, based on what I'm seeing, the inconsistencies, unknowns of acquisition, it just does not make me feel comfortable. So I do hope you enjoy this video and have a great rest of your day. Thank you.